Hey guys, welcome to our last market update for the year. This time I thought I'd drag DC along. We could have a bit of a chat about what's going on. We've got a longer format podcast as well if you want to dive into the detail. But hey Dave, mortgage rates.
Well, let's start with the OCR. So we had the final review by the Reserve Bank late November. So they cut the OCR to 2.25. Of course, you've got to remember we started with an OCR about 18 months ago at 5.5, so 3.25 down. Is that the end?
I reckon it is. The book marked the end of the rate cuts. I think they were always going to do it just to make sure that they were confident they'd get the recovery next year. I agree. I think that they're certainly done. It's interesting looking ahead to next year because I think we'll get a reasonably sort of strong recovery in the first half. Improved consumer confidence.
So this is the economy will feel better.
Yeah.
More spending.
Yeah, I think the first half will feel quite good. Obviously, it's an election year, and so it's going to be really interesting to see how the second half plays out because I think there will be a lot of uncertainty. We won't really know what direction the economy is going in.
Well, you never know the government until a month or two after the election either, do you?
Yeah.
So the media will be intently focused on politics for the second half of the year, especially. So it's just going to be a messy sort of half.
So I think I'm coining Miss 26. So we had Thrive in 25, which became Survive 25. I'm saying Miss 26. 27 is going to be great.
Okay, so it all clicks in 27. Actually, that was meant to be 26. Hey, so for mortgage rates, we're mid fours now. The peak was 7.5% a couple of years ago, so we're mid fours. Is that about as good as it gets?
Yeah, it is. So people that are nervous about rates, if you want to lock in a longer term rate, this is about as good as it's going to get. You've got the benefit of probably going on to a lower short term rate, but the rate difference isn't all that much, right?
Yeah, I think we've got 1 and 2 year rates mid fours, the 5 year rate even's 5. That could be a good option, 5 years at 5%.
Yeah, and
with a big cashback especially.
Yeah, and we've got 3 year rates. Best 3 year rate I think is 4.74. So so some of those longer term rates do look attractive. If you're worried about rates, if you're worried about affordability, then that could be a really good option for you. Others will just want to chase the lowest rate, which is obviously the 1 year fixed rate. There's nothing wrong with that strategy as long as when rates do start to go up, you're comfortable that you're just going to be facing higher rates sooner than if you had fixed longer term.
Okay, house prices. Look, we've got a glut of housing actually at the moment. There's a lot of stock on the market. With all the changes that have been going on, government regulations changing and that, it feels probable we're just going to see house prices probably go up by about the rate of wage inflation over the next decade probably. Is that a fair sort of call?
Yeah, I very much so. I don't think we should assume that the last 30 years will reflect the next 30 years.
Yeah, well, that was falling interest rates from 15% to 5%. That can't happen again, obviously.
No, it can't. That was a one-way journey. Look, I think we've got a government that's hell bent on increasing land supply. We've got parallel importing the building materials. We've got changes to the Resource Management Act. There's a lot of things that are being done to make the supply of housing better, and I think that's really good. There's something really positive that's come out of this current government. We've got low levels of migration. Look, sure, at some point that will pick up again. So it feels like it's very much a market that's in equilibrium.
So there'll be spurts and others, but relatively subdued, more near a wage inflation. So turning to the parts of the market, if you're an investment property buyer, it's actually quite tough at the moment, isn't it? There's a glut of it's harder to find good tenants. That's what the survey
Rents
stuff says.
Rents are dropping, and you've probably got higher vacancy rates. So
investment property owners aren't going to be a driver of competition for houses in the market. Is that a sort of fair observation?
I'd say so, and certainly in the short term. But look, there's always going to be a need for rental property.
So quality is probably the thing to focus on as an investor, is it?
Yeah, well, I think so. I think quality is a really important factor. I think you should be really mindful of what you're buying.
Okay. So for people moving house, you're obviously buying and selling in the same market, but it can take a long time to sell. So what's the advice there? Is it to sell and then buy, or?
I think the opportunity at the moment is there is so much choice in the market. We've talked about that with first home buyers. That's also true with movers, right? Movers are moving for a reason. They want something bigger. They want to move to a slightly different location. You haven't got a better chance to do that than now. The challenge is that it'll also be hard to sell your existing house. So probably the best option is to sell first,
Yep.
and then either rent or sell with a long settlement date,
Yeah.
so that you've got time
I
to buy.
guess the point is, if you're a cash buyer, you've got the luxury of, choice, right?
Yeah, it's a pain in the ass, but it's but look, you do have that luxury.
Yeah. Look, we've called this year we're in the year of the Goldilocks year for first home buyers, and it feels like the drivers that we hear this year, which were falling in much lower interest rates, falling house prices or stable house prices, loads of opportunity into choice, because the market's got flooded, I guess you could almost say, with property, and modestly rising incomes. Your KiwiSaver balances are going up, which is what first home buyers use. So we described it as Goldilocks for first home buyers, and this year, same for next year?
I'd say so.
Yeah, great time to become a homeowner, and of course Squirrel can help you.